Welcome to Techquity, our show on tech stocks. I'm John Marino, editor of Thomson Reuters PE Hub. Today we're going to analyze Apple with Stern AG Shaw Wu, explore Amazon's latest potential move, and make some sense out of the mobile phone deals. Leading off today is Amazon. It's one of our four horsemen of the internet, along with Apple, Google, and Facebook. The company is looking to become more of a player in the hardware business. An Israeli financial paper says that Amazon is in advanced talks to buy the smartphone chip business belonging to Texas Instruments, which already makes chips for the company's Kindle Fire tablets. The move could cost Amazon billions and increase its competition with Apple and other tablet makers who also design their own chips. Texas Instruments stock was nearly up 5% at one point earlier today. The EU is going after Google, finding new problems with its privacy policy's legality and asking the company to make changes again. That's according to a letter viewed by Reuters and follows a 9-month investigation. Google was not immediately available for comment. From the four horsemen, we also go to all the other tech stocks in the world. The best of the rest today, that's Microsoft, taking yet another shot at getting into the music business. This time it's coming out with Xbox Music to try and compete with iTunes and other services. It's going to be available on the Xbox console beginning Tuesday. The big play is going to be the move to computers and tablets. You may remember Zune, Microsoft's previous digital music attempt. That brand is no longer going to be with us. What isn't going away is Sprint. Japan's SoftBank will pay about $20 billion for a 70% stake in the company.
This is pro-competitive and pro-consumer in the United States because it creates a stronger number three to compete with the duopoly of AT&T and Verizon.
Sprint CEO also pointed out the deal gives the company financial ability to play a bigger role in any further U.S. market consolidation. So far, it looks like the market will be shrinking by one as T-Mobile is buying Metro PCS. It's my view that the consolidation could eventually hurt handset makers like Google and Apple. Google obviously owns Motorola. Bigger mobile phone service companies could force handset makers like Apple to take less for their new phone releases. Apple, which charges the most for its phones, may take the biggest revenue hit. Speaking of Apple, a source tells Reuters the company will host an event on October 23rd, a week from Tuesday. It is expected that Apple will debut the iPad mini just a couple of days before the company releases its quarterly results. We are now joined by Shaw Wu. He covers Apple for Stern AG and comes to us from San Francisco. Shaw, what do you know about this announcement, and also what impact do you think it could have for Apple?
Well, there's definitely been a lot of anticipation around this product, and we think also impacted the current business for iPad, causing people to wait. So, we think this announcement will be a positive catalyst to the stock. We think it's actually a key reason why the stock's been weak because people have been waiting for this product. And we think once they release it, it will be a catalyst and should definitely help sales and also help the stock.
I see. Thomson Reuters StarMine Smart estimate, based on what it considers a higher ranking analyst, is a tad above consensus for Apple's quarter. You're a little bit below. How do you see it?
Yeah, I think a key reason for that is exactly what we're talking about here. When we talk to our sources out in Asia, the build plans for the current iPad have actually been lowered. So that's the reason why we're at 16.5 million iPads for the quarter versus the street at 17 and 18. However, we think once this mini is released, the build plans and the demand will actually be a lot stronger, for the December quarter. So that's why we're a little below consensus for the current quarter.
I see. And what is the magic number of iPhones sold or iPhone 5 sold that you're looking for?
Yeah, so what we're hearing when we talk to investors is this quarter, the bogey seems to be around 27 million units. And then for next quarter, it's around 45 to 50, next quarter meaning the December quarter.
I see. The stock has taken a hit lately, troubles at its manufacturing plants, the fiasco over its mapping program. Is this a worrisome sign, or with a buy rating and an $840 price tag, do you have a different view?
Yeah, so when we have our price targets, it tends to be a longer-term view. We have a 6 to 12-month view. Frankly, we don't really care how the stock trades in a day, a week, or even a month. It's more about how it does over the longer term. So in the near term, yes, the stock has seen some consolidation, but keep in mind it's up from about $500, a few months ago. So we think with this iPad mini release, it should help it's been, the anticipation of it has actually been an overhang. And we think once this catalyst has set, we think the stock should actually continue to trade higher.
I see. And do you attribute any of that to the success they've had under Tim Cook's leadership?
Well, the funny thing is when Steve Jobs passed away, the stock was around $350. So even with this correction, it's at, I believe it's at $630. So I would say, at least from an investor standpoint, Tim Cook has been given a pretty a vote of confidence. So we think he's so far done a great job, and it's more than just about one person, right? It's about the whole team, and the challenge for him is to maintain that culture of innovation and keeping people of Apple motivated.
Thanks to Shaw Wu of Sterne Agee. All right, it's time to take a look at stocks that are moving up and down. We call it soaring and sputtering. First, soaring, SanDisk is up nearly 4% at one point today. We have 3 brokerages raising their price targets on the data storage company, including Jefferies, which increased theirs from $46 to $51. The stock is still about 20% below that point right now. From the sputtering end of the spectrum, BMC Software, Raymond James cut the company to market perform, although it has had a very impressive performance in 2012, rising about 30%. That's it for Techquity this Monday. A new show appears each weekday on Reuters Insider. I'm John Marino. This is Reuters.